We are live at the National Bank of Rwanda YouTube as well for people following online. And also questions can be sent online through Slido. An access code will continue to be projected throughout the session, but also a QR code can be scanned using smartphones. For members of the media in the House, there'll be a press conference soon after this event. Please also stay with us for the press conference. Now, ladies and gentlemen, allow me to welcome the Governor of the National Bank of Rwanda, Honorable John Rwangombwa, for the presentation. You're welcome, Governor.
Thank you, Ingrid. Honourable Minister of Trade and Industry, honourable members of Parliament, both chambers, governors of provinces here present, board members of the National Bank of Rwanda and our Deputy Governor, CEOs of different financial institutions and other private sector institutions here present, my colleagues, other government officials, all protocols observed. Good morning. So welcome to this first presentation of our monetary policy and financial stability statement for this year, 2023. As Ingrid has just said, this presentation focuses on what happened last year, the economic performance last year, but mainly focusing on our mandate, the monetary policy and financial stability mandate. Then we'll look at the outlook where we have the numbers. So as always, we start our presentation by looking at what is happening globally, because that has a direct impact of what happens within our own economy. And I'm sure most of you follows these publications by global institutions like the IMF, the World Bank. So the numbers we'll be presenting to you here on global economic performance is really based on what we get from the World Economic Outlook of the IMF, published by the IMF, I think 4 times a year. So the numbers here are based on the publication of January 2023. So the economy slowed down in 2022. As you remember, 2021 after COVID, the global economy was really recovering at high speed. The economy then grew at 6.2%. That's the global economy for 2021. But because of the challenges of Ukraine, the war in Ukraine, and that came with the increase in commodity prices and the already existing challenges in logistics, so that pushed global prices up, as we'll see in the slides to follow. So with that high inflation globally, central banks across the world in different countries took decisions to deal with the inflation, and therefore we ended up with tight monetary conditions. And that in itself affected the financing of the economies. So that also had a negative impact on the performance of the economy last year, so slowing it down to 3.4%. As these conditions remain tight and the challenges linked to the Ukraine-Russia war still remains, 2023 is expected to be even slower at 2.9% growth. That's at global level. For Sub-Saharan Africa, we had 3.8% growth last year, 2022, and this is expected to be maintained in 2023, mainly driven by Nigeria as a country relying mainly on oil exports, and these have been doing well, so this will sustain the economic growth of the Sub-Saharan Africa region. So as I just said, the negative impact we had on the growth of the economy was mainly linked to global commodity prices, linked to supply chain constraints, linked to the war in Ukraine, linked to also measures that were taken by China last year, in most parts of last year, to deal with COVID. So these global global price remained high during the course of last year when you compare it to what we had in 2021. In fact, last year it increased even further. So the global energy index increased by 60%, and this is expected to reduce during the course of this year. At least that's a positive we see on the global front. We expect to see prices reducing mainly because of the tight condition, the reducing performance of the economies. Therefore, that has impact on the global demand, and that eases the pressure on prices. But also, as you understand, there's been arrangements with allowing food to flow from Ukraine. Gas has been again flowing to Europe, so that had reduced the pressures on prices. So we expect to see prices reducing generally during the course of this year, and that is both on the energy and non-energy index. They all show reducing prices, which is positive on our side. Though on one part, when you look at the details, metals have also been reducing, and that slightly impacts on our export earnings. So because of these high commodity prices and because of the challenges with supply logistics, the overall global inflation reached levels I think we had last experienced about 40 years ago at 8.8% last year. And as I said, this is linked to or caused the tightening of the monetary conditions by central banks across the world. And those measures taken to deal with this inflation, we see positive trends this year, 2023, with the global inflation expected to reduce to 6.6 and even going further down next year. For Sub-Saharan Africa, we had, of course, higher inflation in 2022 compared even to the global average at 14.4%, and this is expected to reduce but remain in double digits this year at 11.9%. And this is really linked to the global challenges, but in some countries, like I will indicate, in the case of Rwanda, climatic conditions also affected agriculture. And as we understand in Africa, agriculture plays a big part in our basket. So that was a summary of the global economic conditions. So focusing now on the national economy. Again, as you saw in the publication by the Institute of Statistics, our economy remained strong in terms of recovery from COVID challenges, growing 8.2% last year in 2022, from a high of 10.9% in 2021. So last year, this growth was mainly driven by the services sector at 12.2%, and the service sector was also mainly driven by tourism, transport, and hotel and restaurants. These were main drivers of the performance of the sector, the service sector last year. Industry slowed down a bit to, I can give you the numbers, to 5.5% last year. This was mainly because of slowdown in construction. In fact, construction for 2022 had a negative growth because mainly of base effect. If you remember 2021, we had big projects of school construction across the country. And so that's really being completed during the course of 2021. Affected the overall performance of construction in 2022, growing by negative 5.7, and that had an overall impact on the overall growth of the industry sector. But I think the biggest challenge was on agriculture, linked to the inflation numbers I'll be showing you. So agriculture last year had, I think, 1.6% growth for the entire 2022 from a high 6.4% we had registered in 2021. And this was mainly because of negative growth in food crop production by 0.9%, mainly linked to the climate change. As you remember, last year we had drought for almost the 2 seasons of the year. In both season A and season B didn't perform well. And so this had a big impact in the negative performance of agricultural sector in general, but also on our inflation. Unfortunately, when we look at the numbers so far for this first quarter of this year, from the inflation front, still we see that season A of this year didn't perform well. But I'll come to that shortly on the next slides. So let's first look at the external sector. We still see good performance on our exports. Our exports continue to grow strongly at 33.2% in 2022. And this was mainly driven by the good commodity prices, as I had said before, but also increased manufacturing for exports, especially on construction materials and food exported to the region. So this has really contributed to this continued growth in our exports, but it's also a big component of re-exports to our region. However, despite this good performance in exports, we see strong growth again in our import bill, 26.9% last year. And this is linked to 2 main drivers. One is the recovering economy, therefore we see increased intermediate exports for industrial use. And then as, of course, commodity prices have gone up, our import bill just went up because of global inflation, especially on the oil prices. So this had a negative impact on our trade deficit, increasing or widening by 20.7%. So though we had higher growth in terms of our export numbers, but because we are coming from a low base, the growth in imports really influenced this growth in our trade deficit. And that had an impact on our exchange rate, depreciating, or far under depreciating by 6.05% against the US dollar. So I think that's a summary of the external sector. Unfortunately, as you will realize, I'm not able to give you the outlook for our economic performance for this year because we are finalizing the numbers. We are working with the Minister of Finance currently and the IMF, so we expect to release the new numbers, the projections for 2023 and 2024 in the next maximum 2 weeks. So you bear with us that we are not able to give the actual numbers. But when we look at the trends, the economy, based on what we see in the first 2 months of this year, we expect the growth to remain strong even this 2023. So as I had kept on hinting on is on inflation, and this is something we all experience in the day-to-day lives. I think this year we are having the highest inflation we've had since 2008, averaging 13.9. When I say this year, I mean the year we are referring to, that's 2022, averaging 13.9% across the year. But as you remember, by November last year, we had reached above 21%. It started slowing down a bit in December, but unfortunately in January, because of, again, increased food inflation, we are not able to maintain the trend going down, so it's remained stagnant at around 20.8% for the first 2 months of the year, and we expect inflation to remain high in the first half of this year. But as I was saying, the outlook, we expect this to be going down to our band below 8% by the end of this year. So, as I said, the main drivers of this inflation are the global economic conditions, global inflation, but mainly agriculture and food inflation in Rwanda has really aggravated the numbers of our inflation. On the monetary policy front, as we are facing these challenges of inflation, we had to act as the monetary authority, and we had to increase the central bank policy rate. So from the first quarter of last year, we had projected increased inflation, mainly because of the agricultural conditions we were facing that time. As you remember, the war in Ukraine had not yet started, so we increased our policy rate by 0.5% then. That's in February last year, from 4.5 to 5%. We didn't make any increase in May, but by August, the pressures from the war in Ukraine were vivid in our numbers, and so we had to take action. Since then, we've been increasing almost every quarter, and we've moved from 4.5% we were at in beginning of last year to 7% today to try and really deal with this inflation. In fact, when you look at the main inflation we target using monetary tools, that is what we call the core inflation, that has started going down from toward the end of last year, and we expect this to continue going down. But because of the food inflation, the overall headline inflation is expected to remain high in the first half of this year. And I hope, I know we have experts here from the Ministry of Agriculture, maybe the rains we see today will have a positive impact on season B, and that could have a big driver to bring down inflation, maybe even before the end of the year as we are targeting. So depending on how season B turns out to be, and we expect to start seeing results in end May, beginning June. So maybe we expect to have better numbers beginning of the second half of this year. And with the increase in our policy rates, of course, we saw the interbank rate increasing to 7.1% by the end of last year. And of course, as we increased our policy rate again in Feb, we've seen this increasing. Now it's averaging around 7.5%. Good enough, I would say good enough for the consumers of products of our financial sector. We haven't seen the lending rates really following the policy rate that we're increasing. So our monetary policy transmission mechanism is still weak. How the decisions taken by the central bank increasing the policy rates, how that is transferred into market rates, it still takes time. So we didn't see any big shift immediately from the lending rates or deposit rates. So deposit rates didn't increase, and so far lending rates hasn't really increased compared to where we were last year. Though there has been increase in the short-term money market rates, like the treasury bills and the interbank market rates, but the overall lending rates to the economy haven't really increased. And when you look at the numbers, at least so far, the performance of the banking industry, as you see, it hasn't been that much affected by a lack of increase in the interest rates. So as I conclude the first part of my presentation on the economy and the monetary policy, so we expect, but this I've already said anyway, so we expect the global economy to slow down because of the tight conditions. Commodity prices are expected to be decelerating during this year, as again the numbers showed, and as such global inflation is expected to slow down. Domestic economy expected to remain strong in the medium term. So as I said, we are working on the projections, but we expect it still to be above 6%. So headline inflation, again, as I said, is expected to converge to our band of between 2 and 8% by the end of this year. But depending on how agriculture performs season B, this might be achieved even much faster than we had projected. So that's a summary of the economic performance. Looking at the financial sector performance, this first slide just summarizes what really influenced the performance of our financial sector. The key one is our real economy, the performance of the economy in general, and Because the economy has been strong, the economic performance has been strong, that has impacted positively on the performance of the financial sector. And this is across the subsectors of the financial sector, be it banking, insurance, microfinance, all really benefited positively from the strong economic performance. On the fiscal sector, I think we had increased injection from the government during the course of last year that impacted positively on accumulation of deposits in the banks. External sector, as I said, we saw increased export earnings, and these are positive to our financial sector in terms of increasing their deposits. Though, of course, on the negative side is the imports, but still that creates business for the financial sector in general. The tight monetary conditions were expected to impact negatively on the financial sector, so it has impacted through, I think, just one channel so far, the short-term money market rates, but overall, we haven't seen any big effect from the monetary tightening. So with that, we saw the financial sector continuing to grow in general, both as a percentage of GDP, increasing to 64.9% by the end of 2022, compared to a level of around 63 we were at in 2021. And the overall assets of the entire financial sector combined grew by 17.7%. So that is, in general, the picture. It's positive on the performance of the financial sector as a whole. I'll try to break it down in the next slides. But first, we focus on the stability of the sector, and this is our main concern as the regulator. And these are numbers we use to monitor or as indicators of how stable our financial sector is. Here we are starting with the banking sector. So when we look at, we normally track the strength of the capital of the banks vis-a-vis any challenges that we might face. And we have this ratio called the capital adequacy ratio. I don't have to go into details of what that means, but it just means how strong is the capital of any institution or the sector in general. How strong are they if they are hit by any shocks? How are they ready to face these shocks? And the measure that indicates that they are strong enough to face the shocks is a capital adequacy ratio of 15%. And as you can see, over the last 3 years, the adequacy ratio has been above 21%, which is positive. So that shows really the banking industry has strong capital. And on the non-performing loans, again, it's positive here. For once, for 3 consecutive years, the NPL ratio has been below 5%, which is a benchmark rate we track. And this is mainly driven by 2 things. One, again, as the economy is doing well, as the banks are improving their underwriting conditions or the analytical skills as they approve their loans, but also the write-offs. Where a loan has gone bad, we are strict on it being written off, and so that reduces what remains in the non-performing loan category. And we are comfortable with this because despite the write-offs, the capital remains strong, because the write-offs is really normally supposed to affect the strength of the capital of the banks, but that has remained strong. So we see really 2022 being very positive in terms of the quality of the loans of the financial institutions. And on the liquidity side, these ratios we track is to indicate whether banks have enough liquidity to service their customers wherever they need any money. And so the numbers we see here is that the liquidity of the banks remain strong. So this chart really, when we say the banking industry is stable and sound, this is our basis. This is where we refer to, and we are comfortable that they are strong enough. I will come back to maybe what is happening globally and what that means to our banking industry. Same story with the microfinance institutions. They also sit on strong capital base. Their non-performing loans have also been reducing, and for 2 years now, it's also below 5%. And their liquidity ratio is also strong enough. So we are, again, comfortable with the strength and soundness of the microfinance institutions. Same with the insurance sector. Again, we see the sound indicators we track on the solvency of the companies, on the liquidity. So they all remain strong. But on the insurance sector, I think there will be a caveat there. I'm coming to that. So after looking at the performance of the economy, I mean the financial sector in general and the stability of the sector, this slide is showing how now the financial sector is contributing to the performance of the economy itself, is serving their clients. And here we are focusing on the loans to the private sector. So as you can see, both banks and microfinance institutions, their outstanding loans continue to increase during the course of last year, though in banks it has been reducing a bit from. But 2021, when you see that, 2020, that growth of 21.2%, I would say sort of artificial. It's because most of the loans were restructured, and so the outstanding loans remained stable, and then again they had an increase of the capitalized interest. So that indicates sort of an increase in the outstanding loans, but it's because of mainly the restructured loans. But last year we started seeing again really the loans increasing in actual numbers, both as you see in the booklets or in the document we published. You see the new authorized loans continue to increase. I think last year overall increased around 13% from 15% in 2021. So that contributed to this continued growth of outstanding loans. And for the microfinance institutions, it increased even much faster, and this was mainly driven by Umwarimu Sacco. When the teacher salaries were increased last year, the demand by teachers for loans was really high, and so we saw exponential growth of loans to the teachers, and that's the one driving this big increase in outstanding loans of microfinance institutions. It's really driven by Umwarimu Sacco. On the credit risk, again, which is linked to the numbers I showed on the non-performing loans. So we also track what we call loans in the watch category. Those are loans that are not yet really classified as bad loans, but they start struggling. And so the good thing here is we saw that reducing as well from a ratio of 14.2% to 9.6%. But even this increase in 2021 was mainly driven by the restructured loans. By our regulation, all restructured loans are supposed to be classified as under watch category. So as loans were moving from moratorium to back to normal service, most of them have been able to service their loans, and so it's good that we see the watch category reducing. The other key factor that number wanted to show you here is on during COVID, because of the challenges the borrowers of financial institutions had, we had to allow them to restructure their loans, and up to that 1.7% of the loans were restructured by 2020. This has been reducing to 11% last year, in 2021, and reduced further to just 2.2% in 2022. And most of those, as you saw from the NPLs and all that, and watch category, most of them really moved from moratorium to start normal servicing of their loans. So the room they were given to wither through the challenges of COVID-19 were really very helpful. On the insurance sector, generally speaking, there's positive development here on the claims ratio that reduced from 67% to 62%. We normally expect it to be around between 60 and 70%. So this is positive, and this was mainly driven by improvement in the medical insurance category, the claims on medical insurance, which is a big component of the insurance sector. But we have challenges on motor insurance. As you can see in these graphs, the number of accidents have been increasing almost every year. As you see, last year we registered almost 17.2 accidents compared to 14.6 we had in fact, that's 17,000, not 17.2, 17,200 accidents. So there's been increase in accidents, and that has increased claims on motor insurance. And another factor worsening this is the increase in spare parts of motor vehicles. So this has really increased the claim ratio of motor on the motor side, and has increased the underwriting losses within the motor insurance category. So we are working with other stakeholders to see how this can be addressed to avoid it again impacting negatively on the insurance sector as had happened before 2018. On the pension side, I won't say much here. We just give you numbers of how many people subscribe or contribute in the pension, the different pension categories. There's RSSB mainly for the former workers, numbers increasing to 635,000 contributors. The good thing is on the Ejoheza, that has continued increasing from 1.4 million to 2.4 million last year. And private pension has also increased. It reduced because there was one product that was removed from these numbers. So the good thing again on the pension side, the assets are growing and the contributors are increasing, but also those benefiting have been increasing as well. So we say this is positive also here. Then on the payment systems, I think we've shown these graphs in most of our last presentations, and the good thing is that it has really now, I think the main message here is on the person to business, the payment of people to business. This is mainly through the merchant codes. In 2021, because of the introduction of the charges on merchant codes, we had lost transactions here. In fact, it went down, it went negative, as you can see on the graph on this the left-hand side of the screen, the lower graph that shows person to business. It had reduced in 2021 because of the introduction of charges for use of merchant codes. But last year, working with different stakeholders, we had what we called cashless campaign to educate the population on the benefit of using digital channels. And you can see from Q2 mainly of last year, the curve has started going down. And so we see, and on this side shows the merchants that are active, that has really gone down up exponentially, and also the value that is being traded here has been going down. I mean going up. And so, but also the big jump in P2P you see on this first graph, the green line, while merchants have really started using the merchant codes, but when they stopped using the merchant code, they shifted it to P2P. Instead of you paying through the merchant codes as you're buying goods from the merchants, they would advise you to shift to send the money to their accounts, and to their phone accounts. And because there's no charge between their phone account and their bank account, that encouraged them to use this channel as well. But the good thing is that most of them are back using the merchant codes. And that has an impact on what you see here, the movement between bank and wallet to bank. I think you see a lot going to the bank from the wallet than going to the wallet from the bank, which is again the same on the cash in and cash out. We see more coming in than going out of the ecosystem. So this is positive in terms of the growth in the use of digital channels. I think next time we will try to show you they're still a bit low, but we want to see more use cases being prominent here, like digital savings and digital loans. We expect to see digital insurance. This is when we really say that we are moving cashless. This is really about exchanging money, which is positive. The developments are positive, but we expect more developments on the other use cases. On the RIPS, this is the payment system managed by the central bank. I think apart from the numbers of the amounts traded here, I think what we said, as the MC said before, we'll be showing you a video shortly to talk more about RIPS. And we're talking more about RIPS today because it's now improved product that we have on the market. From last year, RIPS started working 24/7. Originally, it used to work only for 5 days, and it used to work for up to 6. Now we've moved it to work every day, even on weekends, even on public holidays, and works from 7 to 7 the following morning. So that really allows people to transact. And we normally, when you track the transactions, they always go up to around midnight, and then morning around 4 to 5, you see transactions again. So this is really supposed to also drive this use of electronic channels. Apart from working 24/7, it's also now shorter in terms of the clearing. When you transact, you send a transaction from one bank account to another through this channel, it takes less than an hour to clear out. So when money leaves your account, within an hour, the recipient should have received their money. So we know there's still improvements in the systems across the banking industry, but we expect this to even be below 1 hour for this transaction to move from one end to the other end. The other important development is adding more direct participants, more users of more financial institutions being connected directly to RIPS. Now we have microfinance institutions. Originally, they had to go through the banks, but today a client of a microfinance institution can pay directly to a client of any of the big banks using their digital channels without having to travel to their microfinance institutions. So we'll hear more on this on the video that will be shown shortly. So on the outlook on the financial sector, as we said, we expect it to remain sound and stable because we are sitting on strong capital base. We have sufficient liquidity, and the quality of the loans has really greatly improved. Then, of course, we'll continue doing our work, monitoring what is happening with these financial institutions. But I think the last slide is to mention, to just say we are monitoring what is happening globally in terms of the financial institution that we've had. We've had failures in the US, we've had Credit Suisse in Switzerland that have failed. So everybody would really be worried that might become a global financial crisis. So our monitoring so far indicates that we have limited impact of these failures on our own financial sector, but we are working with the banks mainly that would have direct channels with these global financial institutions. So for now, we don't see any immediate impact on these failures globally on our stability of our financial sector. So with that, I thank you once again for your attention. We'll be happy to hear questions or comments from yourselves. Thank you.
Thank you, Governor, for the presentation. Before moving forward, let us welcome Honorable Deputy Governor of the National Bank of Rwanda and the Chief Economist to join the Honorable Governor of the panel for questions and answers. Thank you. As the Governor elaborated during his presentation, We are also going to share with you the new enhanced features following the RIPS upgrade. Now, ladies and gentlemen, let's turn our attention to the screens as the technical team also helps us to show the video.
In 2011, the National Bank of Rwanda established an integrated payments processing system, enabling funds transfer to take place from one bank to another in real time. The system is geared towards making payments faster, efficient, and reliable. The RIPS has been undergoing a series of upgrades. In 2017, the National Bank of Rwanda, in collaboration with the Rwanda Bankers Association, upgraded the Automated Clearing House, a component within the Rwanda Integrated Payments Processing System, RIPS. This helped to reduce the time and cost needed for physical exchange and clearing of checks, clearing related frauds and loss of checks in transit, settlement cycle of checks from 24 hours to 6 hours. Today, the National Bank of Rwanda is proud to announce new and enhanced features of the Rwanda Integrated Payments Processing System, RIPS. Extended operating hours to work around the clock, which will enable banks to transact up to 24 hours a day. Extended participation to more microfinance institutions, hence enabling their customers to transact with other RIPS participants such as banks and other microfinance institutions. The upgrade further enhances the possibilities of Rwandans to transact digitally and optimize the use of internet and mobile banking in addition to other services. Participants also enjoy an up-to-date system with more automated and secure features.
Thank you very much. Now we are opening the floor to questions. We have some questions that came through from followers online, and I believe there should be questions in the room. We have colleagues with microphones. They will assist questions in the room, but maybe before that, let's receive questions from Slido, our online tool. All right, the first question comes from Sarah Umurungi. It says, we still see inflation hiking in Rwanda. What guarantees that the continued hike will end by the second half of this year, as mentioned in your presentation? The second question from Peter says, with some of the world's largest banks going bankrupt, are there significant risks to the Rwandan banking and financial sector at large? Maybe I can read the third one as well so that we receive three at once. Then the last one is anonymous. It says, we faced system downturns many times from system upgrades. What guarantees that from now on, our transactions are safe with these new upgraded RIPS?
Can you read even the last one?
Yes. We also have one more from Anonymous. It says, what initiatives, policies or otherwise, are going on to enhance access, usage, and quality of financial products and services for underserved and unserved?
Okay. Yeah, thank you. Of course, I welcome my colleagues, the Deputy Governor and the Chief Economist, and so we will share the questions, and maybe I'll even allow them take the lion's share because I've been speaking for quite some time. So I'll request the Chief Economist to answer the question on inflation, the first question. I think the second question, I've already answered it as I was concluding my presentation, that we don't see any risk on our financial sector so far, linked to the challenges we see in global banks. And I request the Deputy Governor to answer the last two questions. So maybe, Deputy Governor, we'll start with you.
Thank you very much, Governor. Probably I'll also comment on the second question on the what we're seeing globally on the global stage or global banking sector, being in the US with SFB and with Silicon Valley Bank and First Republic, and in Europe, Credit Suisse. The good thing that I would mention is, one, how rapidly the regulators in both jurisdictions have really reacted to make sure that there's no contagion. Second, we also know that our domestic banks are not that linked to those global banks or exposed to them, which really limits the risk of contagion in our own country. And as Governor mentioned, the fact that being on the capital side, but also the liquidity ratios, we have enough buffers in our banking sector to really sustain any risks. So I think on that we can be reassured that today there are no significant risks, but of course we continue to monitor those global developments and make sure that we don't have any contagion on heightened risk in our own banking sector. On the third question regarding one, assurance that RIPS upgrade, that there won't be any downturn. One, this is a system that's already been used since 2011. It's true that upgrade of core banking systems or payment systems are always daunting, and we've seen a lot of challenges in the operational resilience of banks due to those upgrades. However, we can reassure all participants, banks, MFIs, that RIPS is stable. And even for local banks which have undergone upgrade of their own systems, what we've seen is, one, corrective measures to stabilize those systems, and secondly, our own regulatory framework is being revised to make sure that we really minimize the risks of downturn or downtimes in the systems, and whenever necessary, apply penalties. So I think on that, that's what I would mention. The last questions on initiatives in the pipeline to ensure that we have that underserved communities or populations have access to finance. I would mention probably three things. One is that since 2021, the National Bank of Rwanda has put in place a bespoke department in charge of financial inclusion. We are in the we are in the process of really making sure that we have evidence-based policies in terms of increasing access to finance for small and medium enterprises, access to finance for underserved categories in our population, be it women, being youth, being forcibly displaced people or refugees. And thirdly, it's on the financial literacy and financial education, where we are developing, in collaboration with the Ministry of Finance and other stakeholders, a new national financial education strategy, because we realize that access to finance has to go hand in hand with not only financial literacy, but digital literacy. That is one. And secondly, to also continue to drive awareness on consumer protection law and its regulations, what are consumer obligations and rights, and make sure that we can enforce the provisions of the Financial Services Consumer Protection Law in our financial sector. So I think that's what I would respond to those questions. Thank you.
Thank you for the question. Related to our inflation forecast, I think as it was explained during the presentation by the governor, we need to explain where this inflation is coming from. We faced in 2022 two main shocks. We had an external shock that was coming from the war in Ukraine and COVID-19 lifting restrictions and supply chain issues that affected international commodity prices on one hand, and second, a weather shock that has affected agricultural production and food prices. So our projections that inflation is coming down in the second half of the year is based on, again, the projections on what is happening on these two things. On the side of international prices, as it was presented, international institutions like the IMF, the World Bank are all saying that there's a deceleration in prices for energy products and food and pretty much all international commodities. There's even a reduction in 2023. So taking that into account, the pressure that this imported inflation is having on our CPI basket, on our basket of goods, is reducing. This is what is making us think that inflation will come down. The second condition is supply of agricultural products. And on that side, even if season A results are not yet there, the impact we see on prices, there's still pressure on food prices. But in the second half of the year, with a good agricultural production, these prices can also go down. So in summary, what makes us think that inflation is going to go down in 2023, especially the second half of the year, is the combination of good agricultural production, international commodity prices going down, and the impact of policies that were put in place, including in Rwanda, including monetary policy and other government policies. Thank you.
I think we can move on to the next round of questions, and I will allow to request some of our colleagues here in the audience. If your questions concerns you, please allow us to request you to respond to that question. So I saw a question on medical insurance. I don't know where it has. Looks like it's gone. I would request the insurers here to comment to that. I think there was a question on taxes. Looks like it has also gone. I don't know if there's any Minister of Finance official here. They would have to comment on that. So maybe Ingrid, we can move on the next round of questions.
Yes, thank you very much. Before maybe we take new questions, the same question about inflation came back, but in Kinyarwanda. I don't know if you can do the grace of translating the answer, and then we take new questions.
Okay, so yes, ku kibazo cyo kuzamuka kw'ibiciro cyabajijwe, ntabwo twagaragaje yuko iyo tureba imibare, iyo tureba icyerekezo cy'ibiciro ku rwego mpuzamahanga, kuko ngira ngo mu kiganiro twatanze twagaragaje ko ku rwego mpuzamahanga ibiciro by'ibikomoka kuri peteroli birimo biragabanuka, muri uyu mwaka byitezwe ko bizagabanuka n'ibiciro bitandukanye. So ikibazo twagiraga giterwa n'ibiciro mpuzamahanga muri uyu mwaka tubona kizagabanuka. Icyo rero kikaduha icyizere yuko bizagira ingaruka nziza ku biciro ku masoko yacu, naho bizagenda bijya hasi, kandi mwamaze kubibona cyane cyane ku bikomoka kuri peteroli bimaze igihe bigenda bimanuka. Ikindi mu byateye kuzamuka kw'ibiciro cyane cyane n'ibiribwa, kubera umusaruro utaragenze neza mu bihembwe bibiri by'umwaka ushize. Nanone nk'uko nabivuze muri presentation, ikibazo tubona ni uko n'igihembwe cya mbere cy'uyu mwaka, ubwo ni umusaruro watangiye kuza mu kwezi kwa 12 mu kwezi kwa mbere, ntabwo cyagenze neza, kuko ibiciro ku masoko by'ibiribwa birakomeza kuzamuka. Kandi kuko byaragaragaraga na mbere mu ihinga ritangira, imvura yatinze kuza, ngira ngo yaje nko mu kwezi kwa 10, so biragorana. Hari ibiribwa bimwe nk'ibishyimbo n'ibirayi cyane cyane ibyo ubona bigenda bitera ikibazo gikomeye ku isoko. Ubwo rero twizera yuko iyo tureba imvura uko yatangiye kare muri iki gihembwe cya kabiri cy'uyu mwaka, twavuze ko twizeye yuko noneho umusaruro w'iki gihembwe ushobora kuzagenda neza. Ikindi ni uko wenda niho hari abantu bari hano muri Minisiteri y'Ubuhinzi n'Ubworozi badufasha kubisobanura neza. Tuzi yuko hakozwe ibishoboka byose kugira ngo ibikenerwa n'abahinzi biboneke ku gihe, ari imbuto z'indobanure, ari inyongeramusaruro. Ibyo rero byongeyeho ko tubona none ikirere kimeze neza, twizera yuko iki gihembwe cya kabiri umusaruro uzagenda neza, bikagira ingaruka nziza ku biciro ku masoko. So ni ibyo bintu bibiri dushingiraho by'ingenzi: ibiciro ku rwego mpuzamahanga ko bigenda bimanuka, n'ibiciro by'ibiribwa twizeye yuko igihembwe cya kabiri kizagenda neza nabyo bigatangira kumanuka. Naho dushingira tugaragaza yuko mu gice cya kabiri cy'umwaka ibiciro bizaba byagiye bimanuka.
Thank you very much, Governor. Maybe we can conclude with the last 3 questions that are currently on the screen before we receive questions in the room. The first question is, are there any plans to provide similar tax treatment of contributors by private pension schemes like public pension funds? And then the next question is, looking at private pension funds, please elaborate further the significant reduction in number of contributors. We have more upcoming questions, but I noted the first 2 questions that were on the screen. What drives the decrease in medical claims? And then lastly, any plans to regulate cryptocurrency? We will take those 3 and then move back to the room. If time allows, we can come back online. And if not, we are able to send elaborate answers through the same tool. Thank you very much.
Thank you, Ingrid. I was saying, I don't know if we have anybody from the Ministry of Finance and Economic Planning here. I don't think we have proper authority to comment on tax matters. So if we have one, it would be good to comment on that question. Otherwise, we will say we take the question and we'll engage the fiscal authority, the Ministry of Finance and Economic Planning, that are responsible for tax policies. On the significant reduction, the number of contributors, mainly I think that is on the private pension funds. I request the Deputy Governor to comment on that. What is driving reduction in medical claims? The insurers here, I don't know whether Betty or one of your colleagues, so we push it back to you. But we have the chair of the ASAR, and she's a big actor in this product as well, so we request you to respond to that. The decline in the growth of bank loans would this be attributed to high lending rates that discourage borrowing? And I don't think so. No, if anything, the increase of outstanding loans by 13.9% last year, from a high increase of 15% the year before, we think it's really very positive. So I wouldn't say there is any reduction in the loans, because even new authorized loans last year, I think grew by 13 point something percent. So we see loans continuing to grow. I wouldn't say there was any negative impact on the growth of loans. So the slowdown is just, we are coming from a high growth of 2021 that was coming from a negative growth the year before. So building on that, we continue to see high increase in credit to the private sector. So let me request the Deputy Governor to respond to the question on.
Thank you, Governor. On the reduction that we've seen on the contributors of in private pension, I think Governor had already indicated this is due to products that were more life insurance products that were being offered by private pensions, which we have requalified as life insurance products or savings products instead of pension contributors. So it's just that recalibration in products that explains what we see as a reduction in contributors. Thank you.
Can you comment on the other question on the projects rapidly developing fintech space? What role do you see them playing in the evolution of the banking ecosystem?
Development of fintechs. One, we've put in place regulatory sandbox since 2022, April, which allows fintech companies or startups which have innovative products in the financial space to be able to test them in a controlled environment, without going through the licensing requirements or regulatory requirements. And that is also allows such fintechs, one, to understand the restrictions, requirements to provide financial services. We've seen many of these fintechs active in the payment systems, but some are also providing or proposing solutions in insurance and digital lending. We think that is one way to, one, promote innovation, but make sure that all these fintechs understand the requirements to maintain a stable financial sector and decide, once they've tested for 12 months their products, whether they want to go ahead. And secondly, also, it's a platform that will allow fintechs or new innovations to be considered by the central bank so that we can review or revise our regulations accordingly to allow new products to come on the market. And thirdly, that regulatory sandbox is also meant to make sure that we can link startups or fintechs to existing financial institutions to be able to collaborate or help them innovate internally as well. So I think we are really keen on seeing more development of fintechs in Rwanda. And as you've seen, Rwanda Finance, as the promoter of Kigali International Financial Center, has as one of their priority sector fintech, where Rwanda would be a fintech hub for African countries. Thank you.
Yeah, thank you. Annie?
Thank you, Honorable Governor, and thank you, Deputy Governor. We had a question on medical claims, the reduction in the claims that we do have. We've been, in 2022, we've been having an industry engagement with the members and all those, our members, to educate them about the insurance that they have, the limits that they have, and how it contributes to the loss ratios that they have. So this is the first thing that we did as an industry, a member education. We also had private engagement with our service providers, each and every company, and we did it as also an industry to engage our service providers and see how and why we can reduce on the cost of medication that they were providing to our members. The third thing that contributed to the reduction on the loss ratio was mainly the introduction of a copay for all our members. So now we've introduced a 10% copay, and this copay is the one that contributed a lot in the reduction of the loss ratios in the medical schemes that we had. Thank you, Governor.
Yeah, thank you. Annie is the CEO of Old Mutual Rwanda and the chair of the Association of Microfinance Insurance Companies in Rwanda. So thank you, Annie.
I think we can take questions from the room. We'll continue to do it in rounds of 3. If you have a question, please raise your hand. We have one at the front seat here. Please share a microphone.
Good morning, everybody, and thank you so much for the floor. I would start by appreciating the good presentation we have had, and it's also some appreciation to some data given during the presentations, whereby non-performance loans reduced from 4.5% to 3.1% from 2020 to 2022 in the banks. Afterwards, I will come to some questions regarding the interpretations of different data presented. Number 1 is based on information from insurance, motor insurance, where the presentation says clear reduction of claims despite the increase of the number of accidents. I would there give a proposition that could help to fight against this increase of the number of accidents. My propositions comes back to the one I gave last year during an event like this one, where I proposed to think about motivating some of motor vehicles with less accidents to get reduced the cost of insurance and increase some percentage to the cost of those with a big number of accidents. The second question goes to the payment system with the policy of developing the cashless system, whereby last year we proposed the regulator as the National Bank to look at negotiating with the communication companies to see how they can continue to help Rwandans by making those transactions free, as they did during the time of COVID. But up to this time, I don't know where the banner is so far. By the end of my questions, I will present myself because I didn't do it by the beginning. My name is Alexis Mugisha. I represent the Commission for Economic Development and Finance from the Senate of Rwanda. Thank you.
Thank you, Honorable. Can we take 2 more questions if they're in the room and then answer? Yes, we have in the middle table, we have a question. The third one, one can also raise their hand so that the microphone is given in the meantime.
Guverineri wa Beneri, iyo urebye ibiciro ukuntu biri kuzamuka cyane cyane ku bintu abantu bakenera umunsi ku wundi, tukabona naho mwatweretse ko inflation ishobora kuba iri kurenga cya gipimo cy'icumi ubundi kitagomba kujya hejuru 10%. Ndibaza ngo ingamba zirihe muriho mugira inama leta kugira ngo turebe yuko twahangana n'izamuka ry'ibiciro. Murakoze.
Thank you. One more person has a microphone at the back. If you can introduce yourself and ask your question.
Okay. Thank you so much. My name is Jean Dodier. I'm representing Ingomoko Capital. I first of all thank the governor for the good presentation. Then my question is referring to the last presentation, the last slide, where you presented that you are monitoring the global outlook, especially the global financial scandals that are happening nowadays. Then referring to that, I would like to ask you if you look at the recent scandal that happened on Silicon Valley Bank, what do you think might have been the reasons behind that collapse? And as a regulator, what does it mean in your day-to-day supervision of the financial sector? Thank you so much.
Thank you, Governor. If you allow, we can answer to those 3 and then take another round if possible.
Yeah, thank you. Thanks for the questions. Again, I will share it with my colleagues. I think Deputy Governor, you handled the last question on the international, on the Silicon Valley Bank. The questions from Honorable Senator Mugisha on insurance claims, I think what you're saying is really right, and that should be done. And I think maybe again I would request the insurers to comment on this. I think there has been that push to build a system where good clients are rewarded in terms of their annual policy payments, and bad clients are penalized, I think. So we would expect to see policy increasing or reducing depending on how good the client is. So, but Honorable, while that is really necessary, it doesn't remove the risk we see or the challenge we see on motor insurance today. And what I said, we see reduction in overall claims for the insurance sector, but motor insurance claims have gone up. Again, as I said, it has gone up, it has increased the losses of this product. I think we had managed to reduce it to around 2.1 billion, the loss. Now it has gone back to above 4 billion last year. So there is an issue. So hari ikibazo kuri insurance y'imodoka kirenze kuba umwiza yafatwa neza umuba agafatwa nabi, ariko muri rusange dukeneye igisubizo kireba ibibazo bya insurance y'imodoka. So I would request the insurers here to comment on what they are doing to reward good clients and penalize bad clients. On the question on the removing the charges on digital products, I don't know. I have the players here. I don't know, Mapula or Chantal, if you want to comment on this. But I think, as we said, and as we've been explaining, Honorable, I think it's really difficult to get these services for free for all the time, because otherwise the providers of these services won't be able to provide the services, because they invest in providing these services through money they get through the sale of the services. They maintain the services through the charges. I think what we managed to do was to reduce the charges, at least when you look at the merchant fees that I referred to earlier, from 1% to 0.5%, and then some of the lower transactions are free, but removing it completely for all the time. But anyway, the players are here, they can explain it better, maybe if they have even numbers they attach to that. But when you look at the numbers that we are showing on the graph, I think the most keynote is now awareness than the actual cost, because when, for example, on that merchant, if you transact for 100,000 for one day, I think you are charged, was it 50 francs? So when you look at the charge by the amount you're transacting, it shouldn't really be prohibitive as such if people understood the benefit. And that's what the cashless campaign did last year, was to educate the population, the merchants, on the benefits of using these cashless channels. And you can't relate it to collecting your money and the evening you take it to the bank for physical banking, the risk associated to that, the transport costs. So it's really difficult to zero rate it for all the time. That time it was necessary because of the conditions we're in, but it's difficult to maintain it all the time. Honorable Nura, ngira ngo ikibazo wabajije cyari cyashubijwe ku bibazo bya inflation, twagarutse ku gitera inflation ni iki. Hari ibibazo byaterwaga n'ibiciro mpuzamahanga, leta icyo yakoze mu kugabanya ibibazo iyi inflation itera ku bantu nuko yashyizeho za nkunganire mu bintu bitandukanye. Ntabwo yashobora gushyiraho nkunganire kuri byose. ariko yashyizeho nkunganire ku mafaranga yakwa abagenzi mu modoka kugeza uyu munsi bakuyeho nkunganire hafi abantu bakwishyura inshuro ebyiri zayo bishyura uyu munsi kugenda mu modoka transport public transport. Yashyizeho nkunganire ku bikomoka kuri peteroli muri rusange igenda imanuka uko n'ibiciro nabyo bimanuka, ariko harimo iyo nkunganire nayo yagabanyije iriya inflation. Hariho nkunganire ku mafumbire, uko amafumbire yagiye azamuka ku rwego mpuzamahanga, leta yazamuye nkunganire ishyiramo bituma bigabanya igiciro ifumbire igera ku muturage uko ibihagaze. Ariko birenze ibyo ngibyo, igikomeye gikorwa nibyo navuga wenda hari abantu hano ba Minisiteri y'Ubuhinzi n'Ubworozi batanga ibisobanuro birenzeho, nuko harimo gukora ibishoboka byose kugira ngo umusaruro w'ubuhinzi ukomeze kuzamuka. Twagize ikibazo cy'ikirere, ariko nk'ubu ikirere gisa naho kimeze neza, twagombye kwitegura ko twagira umusaruro mwiza, ko hakozwe byinshi bituma umusaruro w'ubuhinzi wazamuka. So numva ari icyo gikomeye. Ikindi wenda ni ukwigisha abantu twirinda barusahurira mu nduru, kuko iyo ibiciro bizamutse ntabwo wakwirinda ko bizamuka ku masoko, ariko wirinda yuko abantu babizamura kurusha kuko impamvu zibitera. Ugasanga hajemo speculation. So ariko iyo nkurikije ibyo tubona ku masoko nta speculation irimo, ni ibintu biri real byagiye biterwa n'ibibazo biriho mu kuboneka kw'ibintu n'igiciro kiba byabonekeyeho. So ngira ngo reka nsabe Depite Gabana asubize ku bya Jean Dodier yari yabajije.
Thank you, Governor. On the question regarding whether there's been any impact on our own regulatory approach, I touched upon earlier on the I would say the collapse of Silicon Valley Bank, the fact that we don't see any risks yet on our market. And I think it's too soon to speak about what regulatory changes might come as a result of the recent bank failures. I think there's a Federal Reserve review of SVB failure by May 1st. There are talks on whether the Basel III framework will be strengthened. But I think what's important on our market and what we're monitoring is one, exposure to market risk or interest risk in our own banks, exposures to correspondent banks to any of the international banks that are considered risky today. We also have our own crisis management and resolution framework, which we think is robust enough to ensure that if, God forbid, there were any crisis or failure of a financial institution, we would know how to handle it. But I think on the regulatory approaches, it would be too soon to speak about the reviews without having the full picture of what happened in those failing banks. Thank you.
Thank you, Honorable. We can take one more round of questions. Yes. Please raise your hand and introduce yourself as you word your question. If there are no other questions, we can also move to the next part of the agenda. Right. I think I see no other question, unless the hand is not raised. Thank you very much. With that, please, let's... Okay.
The chair of the Bankers Association wants to say something? Oh, okay. Cool. The insurance sector, yes, please.
Thank you.
Thank you, Honorable Governor. For the question that we had on claims that come from the motor class, I think there was a suggestion that we include the malus and bonus in the insurance, when someone comes for an insurance policy, we have a contract that we're doing with biotech, and these providers have the first phase was to introduce the e-certificate, electronic certificate that we have for the cars, and the second product that they'll be introducing is about the malus and bonus. But we have a challenge, Honorable Governor, because we are insuring, unfortunately, cars. We are not insuring persons, and those cars change drivers on a daily basis. So this is what we are trying to solve as an industry. But again, when you look at in East Africa, we are the only ones that have unlimited liability. I know for a fact that we are working on it, but this also contributes highly to the loss ratios that we have in motor. Thank you.
Thank you very much, Annie, for the contribution. With that, please, with a very big round of applause, let's thank our panelists as they walk down the stage. Thank you. As communicated at the beginning of the day, during this MPFSS session, we were to announce two projects completed by the National Bank of Rwanda. The first one is the RIPS, as we showcased in the video and also as elaborated by the governor. And we hope the questions raised were also very well answered. And now let's turn our attention to the second project, which is the Savings and Credit Groups map. Before we showcase a video of what the map is and how to access it, I will give a few background information. Over the past 13 years, Rwanda has achieved significant financial inclusion progress from 48% in 2008 to 93% in 2020. Despite this progress, the same FinScope report of 2020 revealed that around 16% of adult Rwandans remain strongly dependent on informal financial services. The informal financial services are saving groups, and they are locally known as Ibimina. These informal saving groups remain a source of financial services for many, and especially for rural women. The saving groups face several limitations, such as the safety of accumulated funds, small size of loans provided to members that can only cater for consumption but hardly allow them to invest. They rely heavily on the physical exchange of cash, which was challenged during COVID-19. So with the aim of providing a baseline information for different actors to tap in and support saving groups, BNR this year has embarked on a project to update a saving and credit group map. Data on the saving group map that you'll see shortly was compiled in partnership with several NGOs that are currently supporting these groups. Let me ask the technical team to showcase the video for more data and information. After the video, we'll receive questions that will be answered by Kimenyi Valence, the Director for Financial Inclusion at the National Bank of Rwanda.
The National Bank of Rwanda has developed a map that depicts savings and credit groups. These are the small groups of people who save together and borrow from the pooled savings. They play a critical role in bringing financial services to rural areas where access to formal financial services is typically very limited. Women are the majority members of the saving and credit groups, as more than 70% of members are women. Today, we are pleased to present to you the updated savings and credit group map. In this video, we showcase how you can access the saving group map and the highlight of data it avails. The Saving and Credit Group map is accessible through the National Bank of Rwanda's official website www.bnr.rw. Once you click the Savings Group, the homepage will present you an overview of the Saving Group's mapping. You can read the context, the methodology, and overall findings of the mapping exercise. To access the Savings and Credit Group data, click on the map. The map gives you access to the following: the total number of groups, total members, total savings, total outstanding loans, formally served groups or groups served by formal financial institutions such as banks, microfinance institutions, SACCOs, and mobile network operators. Digitized groups are groups that transact digitally through fintech services, and Ejoheza members. You can further navigate the map to view historical data from 2014 to 2021. This data can be seen by province up to the sector level. In each province, the map shows saving groups, female versus male members, and total savings. On the right-hand side of the map, you are able to view more analytics: the saving groups analytics, financial institution analytics, agent analytics, and FinScope analytics. Saving Groups Analytics shows all the NGOs that support saving and credit groups and the number of groups they support. As for 2021, we had more than 91,000 groups and more than 2 million members who saved more than 49 billion Rwandan francs, equivalent to 17% of microfinance institutions' deposits, and had an outstanding amount more than 39 billion Rwandan francs, which is equivalent to 12% of microfinance institutions' sector loans. Among those groups, only 45,361 are formally served and 2,454 are digitized. What are the financial needs of saving and credit group members? Through a survey conducted, we found that 85% of respondents expect to have loan, 13% expect interest on their savings. When asked why they don't have accounts in formal financial institutions, they responded that it is due to accessibility, affordability, and not understanding how they work or operate. When asked about what financial service providers can do to have saving groups members as new customers, they mentioned awareness of products, make products affordable, have flexible terms and conditions to saving groups. Let us all join efforts and support in meeting financial needs of the informal saving groups members. Let us serve these saving groups. Let us leave no one behind.
Thank you very much. I believe the video was able to highlight key data, and I believe it's also a call for action for different actors, financial institutions, and other partners to tap into this opportunity to serve the new markets, but mostly to achieve a transformative financial inclusion for their lives. We are going to receive questions, and the Director for Financial Sector Development and Inclusion, Mr. Kimenyi Valence, is ready to take them all. If the technical team can help us to start with questions online, maybe we have received some already. Otherwise, we could also start in the room. Okay, we have questions online already. So the first question is, why are we concerned about informal saving groups? The next question is, why do people still prefer informal saving groups despite the Umurenge SACCOs that the government of Rwanda put in place and existing financial institutions? Maybe Valence, if you can take the first two, and then.
Thank you, Ingrid. The first question is, why are we concerned about informal saving groups? That's a very good question, because the central bank actually regulates formal financial institutions. That's banks, microfinance, insurance, pension. So why should we be concerned about informal saving groups? I think the answer relates to the introductions that was provided by Ingrid in her opening remarks. From the last FinScope survey, 2020, it showed us that formal financial inclusion is at 77%. That means that you have 23% of our people either being informally served or not being served. So not being served, that's 7%, they're not served at all. But there's 16% held up in the informal sector. Now, why are we pursuing financial inclusion? Financial inclusion, we pursue financial inclusion not because it's an end in itself, but because we have a conviction that financial inclusion is a precursor or an enabling factor for other development goals. For example, if a person can access finance, he can create a business, he can grow a business, he can hire people, he can save for retirement, he can take insurance to manage the risks. So those are the reasons we pursue financial inclusion. And the person being informally served, we really think he has taken the first step. The first step in these informal saving groups, he has a courage of saving. At least he can save, he can borrow. He can actually pay back a debt. He adopts that courage of getting a loan and actually paying a loan. So it's an entry point to financial inclusion. But we think and we believe that this person should not be held in this informal sector for a lifetime, because we believe there are limitations, these informal saving groups. The limitations mentioned by Ingrid, first, the safety of the money. Rwandans, we have a good culture of, being trustworthy, let me just say. And these saving groups, they keep their money with their group leaders. And thank God, group leaders have been having that level of integrity not to embezzle those funds. But these members, they survive on the mercy of these group leaders. So the security of these funds is a concern. But also the amount of loans that they can get from these groups is limited to consumption purposes. So the transformation that we want financial inclusion to offer cannot be offered through informal saving groups. So they borrow 10,000, 20,000, 30,000, 50,000. That's a loan for consumption. It's a loan that can drive investments, that can drive economic transformation. So what we are saying here is that we need to move out of our comfort zones where central bank will regulate formal financial institutions, but we need to work with several partners here to think about the informal. To think about the informal in a sense that we create linkages to the formal sector. We work together first, understand the saving groups, and that's what we are doing here, because if you want to do anything, you have to understand saving groups. You have to understand who they are, how much they save, their needs, actually, you saw their needs. And then once you have this information, then you can take another step. And when I say take another step, I'm saying all of us, regulators, financial service providers, development partners, fintechs, now we take another step of creating linkages to formalize them. So that's the overall interest we have in these saving groups, and it's a starting point, but we have more projects coming to support saving groups. I think that's an answer I can give on the first question. Now, second question, why do we prefer, why do people still prefer informal saving groups despite the Umurenge Circle that the government of Rwanda put in place and existing financial institutions? This is a very good question, because the government put Umurenge Circle to facilitate financial intermediation, especially in rural areas. I mean, to solve the issue of geographical access barrier, limiting, that geographical barrier. And I have to say that Umurenge Circle has, to a bigger extent, achieved, the purpose, the objective of it, because with the establishment of Umurenge Circle, in Rwanda, it's one of the countries where a person makes the shortest distance to the nearest financial institution. So we've solved the geographical access barrier that some other countries are struggling with. With Umurenge Circle, I think the last time I saw, we had around 2.6 million accounts opened. So people have opened accounts, people have started saving, and people have started borrowing, although borrowing has not been going to the same pace as saving. So that's one of the advantages of Umurenge Circle. But then this question is very valid. If we have 16% of our people still preferring informal saving groups,
preferring to organize themselves together, 15 people, 20 people, and do financial intermediation, save amongst themselves, lend amongst themselves, despite Umurenge Sacco being some shortest distance to their households. So it's a challenge, and I push this question to the financial service providers here. I think it needs a research. In the research, and as you do this research, then it informs our product design and our business models and all that. But from the survey that we just presented, the serving group members are saying, you know, there are issues of convenience, there are issues of cost. You know, financial institutions, even Umurenge Sacco, still require a collateral. But what they do in serving groups, it's about, you know, understanding my business, understanding what I do, and basing your lending to my cash flows. So it's a group of people doing the same work. Maybe it's a cooperative. So they know how much they earn, they know when they earn, and they can lend based on that information. But for a financial institution, they always ask for a collateral. So I think this tells us that we need to develop, I don't know whether it's a relationship banking, where we have to understand the people that we serve. When I say, you know, FinScope showed us actually lending is still, you know, the people that borrow from financial institutions, the number is still very small. And really, this speaks to us that we need to understand the people that we serve. We have regional banks, we have that, you know, have products that traditional products, but the people we are serving, the last survey that we saw, the Rwanda Establishment Survey, showed that 90% of our businesses are micro, small businesses. So that is the economy that we are serving, micro and small businesses. So how do we structure our products to meet the needs of the people that we serve? So I think that's what I can answer on that question. But in third question, in addition to providing updated data to financial service providers, what are the benefits that this platform offers to informal saving groups? I think to answer this question, the first you know, service of, you know, of this map is that it's offering visibility of these informal saving groups, that actually they exist. They exist, and those are their needs. Their needs were presented by Ingrid, by the video in the survey. So we exist, these are our needs. So please come and meet our needs. We have financial needs, we want to save, we want to borrow, we want to take insurance, we want to take pension, but maybe your products are not meeting our needs. So come to us, understand us. So this is what the map is giving to these informal saving groups. Visibility in terms of their existence, but also visibility in terms of their needs. So I think those are the answers to the three questions. If there are more questions in the audience, we can take them on.
Thank you very much. If we have questions in the room, we can take maybe two more. I don't see any questions. Maybe if someone has raised their hand, they can raise it a little higher. Okay, we have one question over here. Can colleagues distribute a microphone, please? First row. Yes.
Thank you so much for the floor once again. And congratulations to the winner for the project. But as the good presentation of our brother here, I had some facilities to the informal saving groups, but when we come back to the statement you have mentioned, the relationship banking. In fact, the groups exist, as you know, but they exist because, if I'm not mistaken, because you said there is a need of a research to know why do these people adopt those informal saving groups rather than using formal banks and microfinance banks. Yeah. As you know, these people tried to arrange themselves to help themselves to get bank services without using all procedures that we need to access bank loans and other products from the bank. And this refers to the weakness, if I can say. I said that I would apologize myself by using the terms because there is no research explaining or justifying the mistakes that I'm talking about. But when it comes to our usual situation, relationship between ourselves and the bank products and bank personnel, we see that there is a number of obstacles or barriers between bank users and personnel, whereby when somebody is a client of a bank and he needs a loan, it is a long journey to get access to that credit. And after getting that credit, there is also a lack of relationship between borrowers and bank personnel, whereby we see the bank by the time that a citizen is faring, but during its process of investing the money coming from the bank, we don't see the efforts of the bank to help the borrower to get to achieve his objectives. And when it comes to those people who are not able to join those services, to go to the headquarters of the different Umurenge SACCOs. And by the way, you said about the security of the money, and we had in recent times some banditism and some loss of SACCOs, and people got also confused to get access to their money when those Umurenge SACCOs are losing the money of its clients. So on my point of view, I see that the existing of these informal saving groups would give a lesson to the regulator or the bank industry in Rwanda, whereby there are a number of barriers that needs some modification, some improvement to make sure that we have cares as clients of the bank, we have facilities to get access to different products of the bank.
Thank you,
Thank
Honorable.
you so much.
Do we have any other question in the room, please, so that we can close the round of questions? All right, I don't see any other, so maybe you can answer
Yes,
to that
I
one.
think, thank you very much, Honorable. And yours is not a question, it's an idea, and I agree with you. When you use, I think you use the word, weakness and try to water it down and say maybe, well, when you admit that it's weakness, then the follow-up is improvement, weakness and improvement. And there's always room to improve. And what the saving group map is showing, or the existence of saving groups, 49 billion in saving groups. It's a sign of, first, the opportunities for the banks here. It depends on which side of the coin you see it from. You can see it from the coin of opportunities. You can also see it from the side of some weaknesses, probably, in terms of products not suiting the needs of these saving groups. But I prefer to go with opportunities and to the financial service providers here, because these people have financial needs that are not met with the formal financial sector. And the idea is about listening to them and understanding them and structuring products that meet their needs. So I agree with you 100%, and it's the whole spirit behind the work that we are doing, but also keep doing. And I have to say that in our financial inclusion strategy as a country, it's really not about dwelling on the formal. and there's improving the service for the formally served, but there's doing things in a different way to support the informal. So I agree with you. I think it's not a question, but I agree with you 100%. So yeah, thank you.
Thank you very much, Valence. And that brings us to the last mile of today's program. Before we close and receive closing remarks, maybe I would share a few takeaways from the first presentation and from the last two projects launched. So first, from the monetary policy and financial stability statement, economic growth is expected to continue. Inflation is also expected to decrease. The financial sector remains sound and stable. Let's also not forget to use the full opportunities presented by an upgraded settlement system, the RIPS, and also we hope that, as per the last conversation we just had about saving groups, financial institutions and different partners here in the room have seen an opportunity to tap in with savings and credit groups. The data is available. Now there is just a call for action from everyone. Without further ado, allow us to welcome the Honorable Deputy Governor for the closing remarks. Welcome, Deputy Governor.
Thank you, Ingrid. Honorable Minister of Trade and Industry, honorable members of Parliament, Upper and Lower Chamber, honorable governors of provinces and the Lord Mayor of City of Kigali, senior officials from government institutions, honorable governor and board members of the National Bank of Rwanda, CEOs and MD of our financial institutions, partners of the National Bank of Rwanda, distinguished ladies and gentlemen, all protocols observed, good morning. We have come to the end of our monetary policy and financial stability statement. I would like to take this opportunity to thank you all for attending today's MPFSS and for taking part in the launch of two major projects completed by the National Bank of Rwanda, being the upgrade of the Rwanda Integrated Payment Processing System, RIPS, as well as the National Saving Groups MAP. This event could not have happened without our excellent teams, people that you may have encountered as you entered this auditorium up to the stage, who have tirelessly worked for weeks preparing for this MPFSS, be it our monetary policy and research departments, our financial stability departments, communication, ICT and administration team, and the financial sector and development and inclusion teams. And I would kindly ask you to join me in giving them a round of applause. As we conclude, I would like to mention that for the past 3 years, the central bank's key mandates maintaining price stability and a sound financial sector have been challenged in the most extreme way, not only in Rwanda, but also across the globe. The effects of inflation, rising market interest rates, and continuing geopolitical uncertainties may weaken financial institutions. However, we as central bank will remain vigilant, and as the governor indicated earlier, we stand ready to take action to ensure macroeconomic stability and resilience of our financial sector. In spite of those challenges, we continue to make strides in making sure that our additional mandates are fulfilled, being on consumer protection, financial sector development, and financial inclusion. And this is why upgrading RIPS is significant. It allows fast and smooth transfers between banks and microfinance institutions, and indeed the importance of the Rwanda Integrated Payment Processing System cannot be overstated because an efficient and secure flow of transactions is critical to modern economies. Second, as you saw, the RIPS journey, which started in 2011, when BNR acquired the system, to 2017, when in collaboration with the Rwanda Bankers Association, we implemented the check truncation system, to 2022, when the system was upgraded. This highlights the progress made in automating and digitizing our payment system, and subsequently enabling financial service providers to offer better services to their end customers. Today, we've extended operating hours of RIPS to meet clients' needs to transact around the clock, 7 days a week. We've added 11 microfinance institutions with a total of 728,000 account holders who now have access to the national payment system. They are able to send and receive funds through RIPS, and before that, RIPS was limited to only commercial banks and a few authorized MFIs and cooperative banks which were connected to the system. And a few statistics demonstrate that once RIPS began operating 24/7, we've seen a high increase of transactions. We recorded over 70,000 transactions with a value of 77 billion Rwandan franc in only 6 months, which were processed during night hours and weekends. Coming to financial inclusion, for the past 3 months, over 1,400 transactions with a total value of 4 billion Rwandan franc were recorded in RIPS as microfinance transactions. And this is an important step for our citizens in the rural area in particular, who equally need quality financial services and can now benefit from quick money transfers. And let me go back to the savings group map. As we've seen in the video, over 49 billion Rwandan franc, close to 50 billion, are held by our informal saving groups. And these saving groups have disbursed a total of 40 billion Rwandan franc in loans. That's an incredible business opportunity for formal financial service providers. And members of saving groups, as my colleague Valence mentioned, they need credit, they need insurance products, they need long-term saving products, and payment services. So financial institutions that are present here, this is a use case to increase your market share in our country by tapping into the 280,000 saving groups and add more than 2 million people to your clients. I would therefore urge all financial institutions to actively use the saving groups map and continue to reflect and design business models and products that are more inclusive. We also urge commercial banks and microfinance institutions to have their systems running 24/7 and adopt straight-through processing capabilities to allow their clients to transact at their convenience. And in closing, let me say that building a fully digital and fully inclusive financial ecosystem will be part of our collective efforts and goals as we contribute to Rwanda's ambition to become a Pan-African financial hub. Lastly, at the National Bank of Rwanda, we are committed to navigating this volatile and uncertain global economic environment with our objective of ensuring price stability and financial sector stability intact. And we will remain focused on financial inclusion policies, enforcing consumer protection regulations, and ensuring smooth and efficient client service across our financial industry. I thank you all for your kind attention.
Thank you, Honorable Deputy Governor. And this marks the official end of today's program. Before we usher our guests out of the room, I would like to make a few announcements. First of all, there is a cocktail set up in Foyer 1. Our protocol team will help our guests to attend the cocktail, and I hope this is a good opportunity to network and to further exchange on the different conversations that we had this morning. Secondly, the different materials, presentations, and detailed booklet will be available online on the National Bank of Rwanda website. We encourage you to download and continue using these very informative materials. And lastly, for the media partners in the house, a press conference will start soon after we have ushered our guests. You can begin setting up as soon as we have ushered our guests out of the conference hall. Thank you very much, and do have a good day.